And a very warm welcome to Breaking the Mould, our regular market review with our investment research director, Russ Mould. Russ, what's the fuss?
Clara, the fuss this week is all about bricks and mortar, not just residential housing, though we will talk about that, but also the major infrastructure projects that keep countries running, things like power generation equipment, for example.
Okay, so let's get going with the housing market.
Yeah, okay, straight for the kill. I know that's the issue that really gets to investors' wallets as well as their hearts. And yeah, we're going to have a big look here at the Bovis numbers, a house builder. Figures actually due today, a third quarter statement, Friday the 8th. 3 numbers to watch for: consented land bank, price increases, and also the number of houses that they've actually sold. Now, at the interim stage, sales of actual unit dwellings were up just 2% at 963, but house prices were up 15%. And also the land bank was very strong at just short of 16,000 plots, and that gives very good visibility on future earnings.
Okay, that 15% increase in price is a pretty huge number.
It's a monster number, and interestingly, it jars a little bit with the official house price data. The September figure showed a 3.8% increase. On Tuesday, the 12th, we have the latest house price inflation figures, so let's have a look at those. The same day we have consumer price inflation and retail price inflation. Now they read 2.7% and 3.2% respectively in September. They've been trending down, so it'll be intriguing to see if this slightly more bubbly housing market is starting to have an impact or not.
Okay, so is there a chance that inflation may finally be on the rise?
I'm not holding my breath, and as all of our viewers will know, wage increases at the moment aren't exactly going tonto. They're running at a national average of 1 to 1.5%, and I think until that breaks out, I'm not sure you're going to get a huge jump in inflation, to be perfectly honest. We also need to remember that although places like London are going incredibly well, outside the M25 things are still a little bit more subdued. The average price increase there for houses is still 1-2%, so we need to be aware of that. Having said so, the national UK economic statistics are showing some signs of improvement. Sentiment indicators like the Purchasing Managers Indices, or PMIs, they're showing very strong levels of activity and confidence. Construction work at its highest level since September 07, and the service index reading of 62.9 was the best reading since May 1997.
Wow.
So something must be happening somewhere in the pipe, I think.
Yeah, but could that just be a trickle-down effect from the improved housing market?
Very, very good question. It'll be interesting to see if the Bank of England's Monetary Policy Committee minutes on Wednesday the 20th talk about this, because the Bank of England obviously made its interest rate decision yesterday, Thursday the 7th. Or the other people who will be wanting to see a trickle-down effect will be our friends in the coalition government facing the general election in 2015. Now they'll be looking probably just as closely as investors at some of the consumer numbers we've got coming up. The first lot is Restaurant Group, the owners of Frankie and Benny's, Chiquitos and Garfunkel's. They've got a trading statement on the 15th, and they will be looking to point to, I think, fairly strong earnings numbers again. The market's looking for about 12% this year and 12% next year, partly because it specialises in areas where there's only one site allowed, which is quite canny, things like cinemas and out-of-town shopping centres. You've also got Majestic Wine uncorking numbers on Monday the 18th. There you've got growing store estate, you've got online presence growing. Oh, actually, we didn't have that bad a summer, and hot weather's generally quite good for sales of things like fizzy pop. So the market's looking for 8% earnings growth there this year, 14% next, and dividend increases.
Ah, that magic word, dividend.
Yield income, yes, very good. And obviously that's still, again, going back to our previous discussions on Royal Mail, the yield story was very strong there. You've now got another company coming to market where the yield income story is a very key part of the investment case. Now this company is called INFINIS Energy, and it's actually a leading provider of renewable electricity from things like biomass and wind, for example, and hydro, for example. That company's talking about paying out around £55 million in dividends in its first full financial year, and that equates to a 6 to 7% yield. Again, big infrastructure projects, reasonably guaranteed demand for utilities, visible cash flow means they can afford this sort of payment. So again, you'll have ethical investors giving this one a close look, and also income hunters. There are 1 or 2 other major infrastructure funds out there. One of them is called HICL, and that actually reports numbers on Wednesday the 20th. As we sit here, that offers a yield north of 5% as well. They'll be providing an update on their latest big projects, things like power plants. That's pretty much where we came in.
Okay, thanks Russ. Thanks all for joining us. We'll be back on your screens in 2 weeks' time, so make sure you join us here for more Breaking the Mould.